Welcome back to season two. We have concluded season one. We took a little break. We've been busy working real estate, and now we're going to come talk about it. How have you been,
Yeah,
Rich?
I've been great. We have been super slammed. It's been early summer busy mode over here in local real estate, and you and I have been so much on the road and kind of divergent pathways that we haven't been able to sit down for a couple weeks and record. So we figured, why don't we call what we've done previously season one, and moving forward, we'll call this season two because it seems like just a natural progression of things. If you're new
Mm-hmm.
to our pod, welcome, and so thank you so much for joining us. And today we're going to go into some, I don't want to call it even boring stuff because that's not what it is, but we're going to go into some local market statistics and some data, and we'll talk about our conclusions and our derivations of what that stuff means for us. But in the meantime, Jess, I wanted to start off with a small sort of anecdotal thing that happened to me just literally last night. I get you and I are agents, right? We get random calls and texts all the time. So here's what happens to me. I get a text from someone. It's just a phone number. It's not a name. Now, I'm generally in the practice of saving people that are, I feel like I'm going to have some continued
Mm-hmm.
communication with. I,
Mm-hmm.
I save them in my phone. That seems like a good practice. It comes in as a number, and it's like, when are we going to get around to talking about this damn property? And I'm like, oh, this is aggressive, and
Mm-hmm.
I don't recognize this name. Like, this sounds like I've dropped the ball somehow, or like I've done something wrong. I feel I'm already
Right.
defensive.
Right.
So I'm like, oh shoot. So I start to do a little bit of like detective work. I pull up the number. I look at my call history. About a month and a half ago, I talked to this person, this number, for 16 minutes and 40 seconds. So I'm like, okay. So I talked to this person for 16 minutes and 40 seconds. I didn't record their name. I looked back in my notes because I have like a notebook. I write everything down. It's not the best curated thing in the world, but I do have like some kind of chronological tracking
Mm-hmm.
of my daily business.
Mm-hmm.
I go back and I don't see anything that rings a bell. And from that time period, I look at my emails. I don't see anything that rings a bell. I'm like, what am I? How do I respond to this? I'm on my toes. I'm defensive. I feel like I'm letting someone down, and I'm like, what do I say? So then, so how did it exactly go? So I had no clue what was going on, and then I was like, who did I talk to for? First of all, we talked to a lot of people, and a 16-minute
Mm-hmm.
conversation is not out of the ordinary because a
Mm-hmm.
lot of my properties are kind of nuanced. So for me, like sometimes you have to explain a piece of land for 20 minutes to someone because they're like, where's the boundary? What is this? What
Mm-hmm.
is that? It takes time. So it could have been anyone. Um, I ended up having to do something else. I was literally preparing a listing, Jess, for coming up very soon, and then it all clicked. I was like, here's what happened. The original contact came through from these two sellers, they're siblings, and they group texted me. And so it's been a group text for ages and ages, but he used like a different number for this the call and this recent text, but I hadn't saved the names of the gentleman in the group text. I still have like the numbers. And so every time I go through my text chain, I just see like, oh, this is my little groupie group because I see like the block of people, and I don't have that many group texts in my life. This is a long story. But anyway, so finally I realize, oh, this is not about an accusatory, how about that damn property? This is their property that's near a dam. so so it wasn't so it was me misinterpreting the tone of this
Oh
text.
my
It
God.
wasn't like, yo, bro, when are we gonna talk about this damn property? You gonna ever get back to me, motherfucker? Like it was more like it was more
The
like
dam property, the property with the dam.
it was more like, Rich, there's some fine details we'd like to discuss before we, I was like, oh, that makes so much more sense.
That's why text is dangerous. You just can't tell tone. You
Yeah,
just can't tell because the inflection of the word
yeah.
changes the meaning of the word.
Because I don't like letting people down. I was like, what have I done to
Right.
this person?
Oh no. Who did I hurt?
Uh,
Oh,
anyway,
that's hilarious. Well, haven't had any weird or fun phone calls or anything like that at all, but I certainly have had miles on my car that I never anticipated and driving from one county to another to a third. Just been everywhere, but it's been great. It's busy as we expected it would be, and but I'm actually anxious to look at these numbers because I don't know. I feel like inventory is coming on now. Again, spring sprung a little late, maybe. But I'm pretty steady and busy, and things are coming on, and you know, yeah, yay.
Yeah, so what we'll do now is if you're listening to us, what I'm going to do is I'm going to share my screen. Jess has not seen any of this yet. This is our what we'll do
Hmm.
is we'll look at the data that's produced by our local MLS. It's called the Otsego Delaware Board of Realtors. That's our four county region in this pocket of upstate New York, which is sort of sandwiched between Binghamton and Albany, close to Oneonta, close to Cooperstown. If any of that means anything to you, that's where we work, that's where we live, and that's our territory, and that's where the data comes from. So what I'm going to do is share my screen. We'll talk about some of the numbers and some of the trends. And so this is all I've previewed this once, but Jess has not. So this is how we do it. It's kind of like her live reaction, my data brain, her market brain, and we'll kind of just see where that takes us. If you're watching us, should be able to see this on YouTube and see the screen. If you're listening, there are some graphs and stuff that I will try to make more palatable from the road or wherever you're listening. But anyway, that's what we're about to do. So I'm just gonna bear with me as I do the process here to get things shared. All right, Jess, are you seeing stuff?
I see stuff.
Okay, perfect. All right. So I like to start off with a. They always start with some national trend type stuff, and then we'll go into like local, and then they zoom out to a national trend again. We are now recording this late June of 2026. The data
Mhm.
we're looking at is from May, so there's always a lag effect. But so either the month of May compared to last May, or the entire year of 2026 through the end of May compared to last year or years past, right? That's how this works in general. What we're seeing in the national market is existing home sales are up a small margin, 0.2% from the previous month. So incredibly small uh, seasonal gain. And we're looking at just over 4 million homes predicted to be sold for 2026. We've talked about this in the past, Jess. That is a relatively low number of homes
Mhm.
sold. The national housing market for existing homes is kind of slow. It's on track. It's just a little slow, and we'll talk about multiple reasons why that's happening. One thing that is new is that it's flattening out in the Northeast. In the past, the Northeast has been one of the last bastions for high market activity and for price increases, and the Northeast is starting to slow down significantly. So that's new for us. Uh, Locally, now we're into our four county area. So some of these numbers are much smaller than national trends, but we've got new listings up 12.2%. So there's 220 new listings in May for our area. However, Jess, pending sales, that means things going into contract, are down 16%. So
Yeah.
89 homes went into pending status in May.
Yeah.
And of course, if you're putting houses on the market, you're not as many are coming off the market. You're going to have an inventory increase. And
Increase.
we're
Yeah.
talking
There
about
is.
35.9%, Jess. 553 available homes now in our MLS, in the residential status.
That's
And
crazy.
what's interesting, Jess, is that that's we'll see in a deeper dive. That number has been continuing to increase for a while for us,
Yep.
but oftentimes in economics, right, you get more of something available, buyers have more choice, the price of that good will come down. That's not happening where we are yet. We have a continued trend for our median sale price is up. It's up 13% from 221 to 250. So we're literally at 250K for our median sale price for May. And despite that, our days on market are, well, I guess that correlates. Days on market are down. However, that supply of inventory is up almost to a 6 month supply of inventory. Now, that's a weird term. What it means, Jess,
Hmm.
is just that if every property available right now was to eventually go into a buyer's hands for contract, it would take
It
about
would
six
take.
months for
Yep.
those to all go into contract.
Right.
It's a weird way of explaining inventory, but that basically just means, yeah, how much is available compared to the buying interest and activity.
So you had done that breakdown, I think it was last month, to look at the price points that are coming on and still selling pretty strong. Because, like you said, more inventory means prices should be coming down. But it sort of looked like anything under that 300,000 mark was still going bonkers, and that's your primary market. That's your buyers that, they live here, they work here, they need to move, they need to upsize, downsize, whatever. They're still having a pretty tough time finding things in that price range that, that are not getting, I don't know, blown up. And then everything over that was sort of where the inventory was increasing. So I wonder if that's exactly the trend that's just continuing. I mean, I don't know why it wouldn't be, because I know anything under, well, over 300 that I have, I mean, have a little bit of interest, but it's crickets. It's crickets. It's crickets. Crickets.
Yes, and this is what we'll get into this, I think, quite a bit more in the next few minutes. But I think that is the takeaway for me as well. I think our real estate market is just, there's a lot of pressure. I feel like there's a lot of pressure, and what I mean by that is, one of these slides, one of these pages is affordability, and the affordability index just took another significant downward turn. Meaning, in the last month or 6 weeks or whatever, the consumer is just having an increasingly difficult time finding the funds to purchase that house that they want. And you combine that with the fact that sellers, oftentimes, either in their mind or in their agent's mind, they're still wanting to toe this high price expectation that was realistic 3 years ago, but it's just not realistic in the midsummer of 2026. Things are changing. The market is slowing down. Buyers are struggling. If you want to sell your home, you've got to really pin that market price to where the activity will be. And remember, Jess, now we're talking about increasing inventory. That means there's a lot of choice. If there's a lot of choice, and I want to sell my one thing out of the many, I'd better have a really compelling offer.
Yep. Better be gorgeous. It better be priced well. It better be clean.
Exactly.
It better be appealing. You better
If you're
pull the
going to
weeds.
ask 100%, if you're going to ask a premium price, it better be a premium product. Bottom
That's right.
line. And if it isn't, then you have to scale it back 100%.
Yes. Yeah, and the market's gonna dictate it, and that's what I think at the end of the day everyone has to remember. A house sells for what a buyer is willing to pay. That is just the golden rule of real estate. It's what they're willing to pay, what you think it's worth, what your emotional value is, how much you spend $100,000 on that bathroom. No one cares. Please hear me. No one cares. It's what a buyer is willing to pay. So if you feel like the offers are all coming in, if your house is at 250 and offers are coming in 205, 210, 215, that's what the market will bear. It doesn't matter. Now you have to look at it and go, all right, what can I actually get from this? And get them as high as you can, of course, which a seller's agent is always going to do the best and try to get you the most value. But no one's going to overpay these days. Not like they used to.
Yep. Yeah, and this will come true as we go through this little presentation, but that'll come up again. I think that is my take home point. If you want the one singular takeaway, is that sellers have to wake up a little bit, especially around here. Again, the Northeast, and especially our little upstate New York pocket, has been incredibly protected from any kind of price flattening, right? And we're going to see it in a second. Our median price is double-digit increases for months on end. That is not sustainable. It's just not sustainable in the face of all this stuff. And to that point, the last little key data point that I wanted to point out here is that for the first time in ages, our 1 year change in closed sales for May is down. So we have a reduction, a drop off in closings. That's compared to last May, which, if you remember, that was a slow year. So our May of 2026 is even slower than a tricky year the year before. And for me, if you combine the slowdown in pendings and that little nugget right there, that indicates to me that we're in for a little bit of a tough summer for agents that are not on the ball, that are not pricing correctly, and they're not aggressive in what they're doing, because this is when
skill.
This is when skill matters. Yeah,
Training, support from your offices. Like, I don't care what brokerage you're with, lean into the experienced agents. They've been through shifting markets. Talk to them. There should be panels going on. People should be having these conversations, because the newer agents, if you've been in this 2 to 5 years, you've just been in this sweet spot, and you're going to be in a real estate market, and not many of us survive that. So, yeah.
And to that point, Jess, we'll go to, if you're watching this, I'm still sticking on this first page, but we often tend to think like seller perspective, because you and I at least for the most part, try to be kind of listing agents. We do both. We love both. But
Yeah.
I think what's happening now is this is where the buyer agent gets to sharpen their knives a little bit, and you can advise your buyers in a we're getting to a point fully balanced market, and in some probably some price points buyers power dominant. So you can do things like negotiate harder. You can do things
Hmm.
like make sure you really get aggressive on those inspection results. You can you don't have to worry so much about these agent compensations. You can probably ask for seller concessions. There's things that agents have in their toolkit that didn't really have to pull out all that often in the past. But now your buyers are getting a little bit more negotiating power. It's
Hmm.
actually, I don't want to call it fun, but like balance is nice. And every
And
property, of course, every single property is different,
different,
but on the
right?
whole, yeah.
Yeah, because like just right now, I'm working with buyers that they've been through like three or four highest and bests, and they have lost. So they still have this mentality that, I mean, they've written an offer up now. We're showing the property later today. Like they've written the offer up in advance, and if they like it, they're just going to hit sign in their inbox as we're backing out of the driveway. I mean, they've just been burned. So that's still kind of out there too. But
That
again,
still
that's the
happens, right?
price point.
100%. It
Yeah,
still happens. Yep.
it's still going to come down to price point where they're really looking under 300,000. And if you list a cute little cabin with any kind of land right now that has like little wood and little rustic accents, you're going to highest and best. Still, that's what everybody wants. But if you list anything else, that's a more practical house or a village house or something like that, you're going to be at the mercy of the market. And you need to make sure your agent, at least if you yourself are not listening and you're not, you don't know where to get those resources and that information, but make sure your agent is really plugged into resources and information and is watching the market, because this is how we make you successful, is by knowing these things, seeing these things, studying these things. That's why Rich and I have been doing this for 3 years, 4 years, looking at the market every month, because
Yep.
this
Every
is
month.
how we advise our clients now. Yeah.
Yeah. And like, sometimes for us, it gets a little redundant, but I still want to look. It's like, I don't know, man. I feel like I'm a professional. I feel like it's my job to know this stuff. I feel like
Yeah,
I
it
don't know. I
absolutely
don't know
is.
how. I don't know how you can't want to know
I
this,
don't
right?
know.
It's just.
Yeah, I don't know how you don't know this and function.
But anyway, so on that point, let's fly through some numbers. There will be some terms and stuff like that. But let's just go through this master list, and then we can take any little tangent if you want to. But so our new listings are actually still way up for the year. So we're at 697 new residences on the market in 2026 compared to
Wow.
597 last year. So literally 100 more homes.
Yeah.
However, our pending sales down 2% for the year, but we're down 16% May over May. And I think that is the warning sign that I'm concerned about. You combine
Yep.
that with our closed sales that also are now negative. So two important things, right? We're still up on closed sales compared to last year, but that slowdown has me concerned, especially since May, June, July, August are typically our good months
Right.
in our upstate seasonal market. I didn't highlight anything about days on market because I still think it's a little bit back and forth, and I think the numbers are just anyway. They didn't jump out to me as something that's worth noting at the moment.
Hmm.
Our continued talking point is our regional, and this is one that we've tried to kind of pull more from this singular information, but our average and median sale prices continue to go up. If you own a home in our area, you're in a great spot because just overall your property value just continues to go up. Now I'm worried. I'm worried that this might not continue, and I think that I think this is just a little bit of a false data point, and I'm still trying to find exactly how I can proof this, but
Hmm.
I think that essentially our low price stock is almost tapped out, or at least it's slow,
Yeah.
and our high price stock is also slow, but you sell five nice houses and it's going to really skew that price a little bit. Um,
Right.
and I think that's the truth, because I don't think you're look, our average sale price in May was 275. I think our average domestic unit can probably buy a $275,000 house, but it's probably getting to be a stretch. I don't know if I don't have local economic
Just it
data to
depends.
back that
Just
up, but it just
depends. Yeah.
yeah, yeah,
It's very, like you said, it is going to be a case by case a lot of times
yeah.
too. There really is no blanket statement that speaks to the entire market. Because also in the last week, where I have these buyers that are looking under like 150, I have three
Hmm.
of them.
Hmm.
All of a sudden, a whole bunch of houses came on 100,000, 99,000, 95,000, and they weren't complete wrecks.
Yep.
I was shocked to see that. I was like, "That's what we've been waiting for," and they're
Yep.
going up. And also, I was shocked to see that they're still there. So I've got to get my people kind of in gear and moving. But then I saw that, and I was like, "Dude, okay, so this is." From week to week it's changing as
Hmm.
well, which is kind of
Hmm.
interesting. And then I'm still seeing luxury properties go up, 500 plus, still seeing that coming up and going up. And I don't know what those properties are doing. That's why that deeper dive into the price point is really an interesting conversation.
Well, we did that last month. If you want to
Yeah.
go back to our one from about a month ago, but the take home message at that point was in that 500 plus for around here. That's semi luxury, or
Definitely.
upper middle class and above. But anyway, there's way fewer things. That's where your selection is huge if you're a buyer. There's so many available properties compared to how many are actually selling. It's incredible. It was like 10%, a 10-to-1 ratio of available
Yeah,
versus
actually. Yep.
closed. And a couple other things I wanted to point out here just in the data. So our percent list price, again, correlating with slowing sales, correlating with slowing pendings is a reduction in list price. Not by a ton, but this is one I'm watching. We're down to 94.6% for the year of list price, and that's getting to one of the lower numbers we've seen in years around here. So
I do feel like I've seen a lot of price reductions. I have
yep,
seen that too.
price
Yeah.
reductions. I can't in our MLS just I can't pull a specific stat on how many like active homes on the market right now have had price reductions. I wish I could. It's not one of our data pulls I can do, but I would have loved to have been able to compare that to years past. And I think you're right. I think we're seeing every day I look in on my market watch, and I
Price
see price
reductions.
reductions
I definitely see
are
that.
going up. Yep.
Well, that's why, again, like I try to price very conservatively. I know my seller wants 550 and we're not listing there. We are just not. So again, having that, being able to have that conversation about the true value, it's what a buyer is willing to pay for it. How do we put it out there? Understand as a seller, I'll speak to the homeowner briefly. When you sign an exclusive right to sell, right, or we lovingly call the ERTs because we're too busy to say that mouthful of words, you're not selling your house at that moment. You're not signing a contract of sale. You're literally signing a marketing agreement. You're
It's a marketing
allowing the
agreement.
agent, yep, to market your property. That's what you're signing when you sign a listing agreement. And I think a lot of people put way too much stock and worry and they take too much issue with this document where you can pull it off anytime you want, but it's let's market it. What am I allowed to market it for? Well, I want 550. Okay, well, I want to list it at 499. I just want to market it at 499 and drive the price up and see how close we can get to five. That's a strategy. So again, understand that you're putting a product out for sale the same way they put something out in Walmart, right?
Yep.
And everyone goes, why is Walmart like the number one place that people go and Target? Because it's cheap, because
Yep.
people want a deal. So we're not giving your house away because you didn't sign a contract to sale. You can take it off the market if you don't get offers that you like, but you got to market it where you're going to get the most traction. And then you do what you can. You got to have a good negotiator, but then you do what you can to get those guys up.
Yes, that's well said. That's very well said. I can't add anything.
I just want the seller to hear the homeowner because your house is your greatest wealth asset. And I think as listing agents, as Rich said, we kind of identify as listing agents. We want to protect your wealth and we want to protect property value as well. And then one small thing I wanted to say from before, like being in Keller Williams, being a global entity and having, offices all over the country, our Northeast region has always had the lowest sale price in the entire company. And that,
Our northeast of New York. Is that what
correct.
you mean? Yeah.
Correct. And that's, I think, a factor in why we have so much growth and have, the seller market is still strong and it's still going up, because people are finding that our area is still one of the last affordable areas.
Hmm.
And what's going to happen when they realize, oh, that's affordable, let's go that way, it
Yep.
becomes unaffordable. So we're seeing that transition now because people have found us, right? For a lot of reasons, people have found us and they're starting to buy here. So I've been waiting for that other shoe to drop, as they say, but we have been the lowest price point in the country, and we're not going to be forever. So it's just an interesting point to be aware of.
It is. It's a unique spot in geography because we are in New York, and a lot of people have strong opinions about New York State.
Hmm.
You constantly hear about taxes. You hear about New York State
Least
governor, all this stuff.
affordable in the
That's
country.
fine. It's fine. But at the same time, on that first slide, national median home price right now is 417. Guess what? Upstate New York, where we are, our median right now, I'm looking at it right now, 228 for the year. 228 is our median sale price. So
Right.
you can get a
Exactly.
house for a lot less than your average or your median across the country.
Is it really 417? Just like a little side note,
417
like that
national
is my
median average. Yeah.
that is my good luck number. That is my indication number. That number shows up when it's important in my life. Cool.
So just last couple things to touch on. The the now there's something called the Housing Affordability Index, and I'm not going to take the time to define this necessarily because I don't fully know it. I talk about it ad nauseum, but it's an algorithm. It combines economic factors, inflation, interest rates, mortgage rates, the treasury yield, like a lot of stuff. It's just how does living life in America, compare to buying a house in America, essentially. And it's been housing affordability index has been low for a while, and we're down almost 9% in May compared to last May, and we're down almost 10% for the year compared to last year, which was
Yep.
already a difficult affordability year. So you got war going on, or at least recently going on. You've got you know mortgage rates that are still hovering in the mid 6.5% range. Low sixes, mid sixes. That's not easy for anyone to afford anything,
No.
or at least not your dream home. You can afford something, but you're going to have to concede on some fronts. Anyway, bottom line is when your groceries and your gas and everything costs a lot, and buying a house costs a lot, that makes it less affordable. And that's where we're at. And that's really where I'm at. I don't have like a dour opinion of the market right now, but our local market, I do feel like sellers are still being sold a kind of a fairy tale a lot of the time. And that's the onus is on the agent to actually perform a real pricing analysis, to actually have a difficult conversation about, look, you're hiring a real estate professional to help sell your home. By the way, there's a buyer that's also going to be hiring their real estate professional to sell their home. And if you want to sell your home in a competitive market, we can get into this in maybe a different pod, Jess, but
Got to
there
be
are ways
competitive.
to
Yeah.
help induce that sale, and part of that is by helping to cover that agent's fees to their client, right? Because if you want to stand out, one of the ways to do it is to say, "Hey, I'll cover your costs and make it easy for you to buy my home." And I don't think agents are understanding that quite yet. A balanced market means you don't, as a seller, have all the power. You've got to think strategically, and then
I think too, then you
yeah,
get, because a lot of times you get, so just sorry, but we should talk about that because I think there's so many different, especially with the lawsuit, like, yeah, we've uncoupled the commission and you don't have to pay it. Sure, you don't have to pay
you don't
it.
have to.
And I think that as a homeowner right now, trying to protect, again, your asset, your wealth, what you're going to net at the end of the day, you can be in control of it, right?
Hmm.
Meaning, let's plan for it. Let's
Hmm.
set the amount. Let's make it, as aggressive as we can comfortably. Let's make sure it's competitive. Let's make sure, it incentivizes, especially in a tightening market. And it's still at the end of the day your choice. So you can pick whatever strategy you want, and we're always going to advise you get ahead of it, right? Which you have the right to do, say, I'm going to put out 0. I don't care. Okay, well then guess what? Offers are going to come in with 3% anyway, 4%, 2%, whatever people want to charge you, because they have
Hmm.
the right to charge what they want. And now you're in this deadlock because you don't want to pay the buyer's agent anything, but the buyer probably doesn't want to pay their agent either because traditionally they haven't. So you just don't know. So I think my best advice to sellers is really always get ahead of it, plan for it, let's build it into your net. Then we know what the offers have to look like in order to make it a comfortable closing cost. Because at the end of the day, the buyer writes the check anyway. The buyer's
Buyer
paying
writes the
for
check.
everything anyway. You're not paying for anything. You're not writing a
It's
check.
one
You're
of the
getting a
biggest
net check. Yeah.
misconceptions out there. Even
Yeah.
like, yeah, correct. Like, yeah, we get paid by the seller, but if the house doesn't sell from a
We
buyer's
don't get
money,
paid.
then we don't get paid. So it's not your money. You're not paying us. You're just paying us a little. You're getting a little less of what you, you know what I mean. And that's been the norm for like decades and decades.
Right.
There's nothing different happening. It's just, you, I just feel like conversations need to be had about exactly what you said. It's the net. It's what can you walk away with. And by the way, when I run my true market comparables using MLS based data, 98% of MLS based data has a buyer and a seller compensation built into that price. So I think it's important to say, hey, if I want to, I don't want to go into a deep dive on like an exclusive right to sell right now, Jess, but
No.
you had mentioned earlier that it is essentially a marketing agreement, right? It's what it is. It has little sections on, can we put this thing on the internet? You know, can we put a sign out there? You know, are you okay with like the concept of concessions? And
Right.
also,
It doesn't
one of those
say
things
like
are,
right. It
and one of
doesn't
those
have
things is
terms for sale.
also, are you willing to offer to cover the buyer agency compensation? And again, you have every right to say, I'm not willing to at this time, but like the truth is, when you kick the can down the road, we are going to have to revisit that conversation.
We definitely are going
Guaranteed.
to have to revisit that. Offers are
Yep.
going to come in with requests. I mean, I know I write my offers like that. I write all my offers with my fee built right in.
Hmm.
This offer, it's not necessarily contingent. I think that's a really strong word because the seller can always come back and say no. And, if my buyer can't, I mean, agents have to, at the end of the day, make a decision on what that fee looks like really in practice. And sometimes we have to take less, or there's deals you get more on, there's deals you get less on. I think we all need to be negotiable. No one can really be rigid in this type of market, but again, it is being able to have a higher level net conversation when
It's
someone
a
is
net
ready to list a
conversation.
house. They have to know what they're going to get, because if they're not going to get enough, you have no business even listing their house. You
Yep.
shouldn't even list their house. You need to be
Yep.
responsible in that way.
Yep. Oh, I just had a quick thought on that, and then it just rapidly disappeared.
And it went away, evaporated. Do you guys hear the rooster?
Totally. Yeah, but it's so I'm still looking. I'm looking at the. I haven't looked at you this whole pod. I'm looking at the document, so I'm sharing it. But I hear this. It sounds like a delightful farmstead in the background.
A delightful farmstead. I like that. Let's go with that. Everyone envision a delightful farmstead, not a rooster that lives in my mudroom in a dog crate because my chickens got murdered on Christmas. Yeah, see, that's a glimpse into my life.
That's
So
okay.
what's the next number up?
I've only had to pick Pepper off my desk one time so far today. Pepper's my cat. If you know.
Yeah.
No, but
Oh,
that's. I
there he
think.
is.
I honestly, I think that's our summary. I don't want to go too like the rest of this document. Just kind of goes into each
Breaks
of those
everything
small
down.
statistics
Yeah.
a few more times. What did I have that jumped out to me? Super quick. I'll summarize. So our new listing trend line has been double digit positive numbers, meaning new listings popping off ever since the last time we had a decrease in listings was November of 2025. So it's been whatever that is. I can't think months. It's like
I know.
7 8
6?
months
I don't know.
of
can't
consistent huge new listing increases. That's what's supporting our inventory. What else stuck out of me? Oh, 3 months in a row now. We're double digit negative in pendings. 3 months in a row, Jess. It's not just 1 month. This is happening. We had a
Yeah.
hugely positive January and February, which is inflating our numbers. But if you look at March, April, and May, we're down. Contracts are not being written at the clip that they've been written before.
Yeah.
It's starting to look a little scary.
That's the
That's what I'm saying.
indicator. Yep. That's
Yep.
the indicator of a shifting market. That's future money right there.
the closed
And we
sales
know anyway,
negative.
just
Sorry.
sorry, and we know anyway, just because I get a little bit of a backdoor glimpse into the office's numbers and being almost 30% market share. Our market just at Keller is indicative of, I think, a lot of times the market as a whole. We have new agents, we have seasoned agents, we kind of have everybody in between. And I've been seeing that the actual company dollar has been way down since I think March was the last month. So we were like really, popping at the end of 2025. There was a lot of momentum. It's interesting. September and October have actually been the biggest months for the last few years. So I'm interested to see if we kind of rebound again and now start putting stuff on in the summer and then closing it up in September and October. But it has been much lower these last few months too, which is not what we usually see.
Yep. Yeah, our closed sales are down this month for the first time in a while. The last time it was negative was September of 2025. So again, you're going back pushing 9 months for that. That's that same trend.